to various individuals, the companies, SSEs. So that is my business. I'm providing that business. I'm doing that business for the sake of my own long-term goals. So that is the thing. In the next thing, we just want to understand there are various types of entities given in Indian Companies Act and Income Tax Act. So whenever we are preparing a company, registering a company, we have to think on the basis of the Income Tax Act and the Companies Act, because these are the main laws which are governing all the company rules and other factors for making a company. So the next thing is types of entities. There are various types of entities provided in the Companies Act and whereas in the Income Tax Act. So these are the basic companies which are provided: private limited company, public limited company, sole proprietorship, one person, partnership, LLP. So these are the main types of entities which have provided in the Companies Act for the companies. Okay, so there are other companies also like Section 8 companies, NGOs, and NIDHI company. But our main focus is on these kinds of entities only. There are various other classification of companies, such as companies on the basis of liabilities. So there will be limited liability by shares, companies limited by guarantee, and unlimited guarantee company. Second is on the basis of members. That will be one person company, public limited companies, private limited companies. The next is on the basis of control. There might be holding company and subsidiary company and associate company. So first we will introduce the holding and subsidiary company. The holding companies are those companies which are holding the shares of the company, such as more than 50%. The companies which are holding more than 50% of shares of any company, that will be a holding company. The subsidiaries are the companies in which the holding company has the shares or stake. And the associate companies are those companies in which more than 30% shares are held by any other company. So it can be a joint venture, it can be another company. Okay. Next, come to on the basis of the members. There are three types of companies: one person, private, and public limited. So the one person company is only a single person who is making a company and run with the privileges of a private limited company. The private limited company is specified in Section 2 of in Indian Companies Act 2013, and it specifies the private limited company are those companies which are not public limited company. So it's a very difficult definition as per my understanding, because the domain of public company is very huge and the domain of private limited company is also very huge. So the public limited companies are those companies which have at least 7 members or directors and have the paid up capital of at least 5 lakh. So this is the public limited company. And next is on the basis of liabilities. So the companies can be made incorporated on the basis of 3 things: the liabilities. First, limited by shares. If I am a shareholder in a company, then the company I am owing a liability only to the extent of my shares only. It is not more than which I own to the company. Okay. If for example, if take I am a shareholder of Reliance Industries, and I have purchased like almost 10 shares of 10 each, for example. So I have the liability of 100 rupees towards Reliance Industries. Okay. Then there is a limited by guarantee. For while the incorporation of the company, I have given as a shareholder or the first subscriber of the company, I have given the guarantee that in the time of dissolution or any other mishappening occur to the company, then I will provide, I'm giving a guarantee to the company that I will fulfill all those all those amount which I own towards the company. And next is unlimited company. Unlimited companies are those companies in which we have the unlimited liabilities. These can be the partnership company, because in partnership also firm we have whole unlimited liabilities. Uh, if you are if you have any question, then you can also ask me in between the slides. And if you don't have any question, if you don't want to ask between the lectures, then we can discuss it after the lectures in the 5 or 10 minute session. Okay, cool. uh, there are various examples, and there are various forms of the company which is based and specified in Companies Act 2013. So here it is a very good example which is specified. Some professor, I don't know, but he has specified the Companies Act, that on the how and provided the basis of incorporation of the company and the types of companies. First, the incorporation. On the basis of incorporation, there are only two companies: statutory company and registered company. If we take the example, what is statutory company? We understand the statutory companies are those companies which are formed by some laws or by the statutory act of any government or law. For example, we have LIC, Life Insurance India, Life Insurance Corporation of India. That is a statutory company because it is defined under the law. Second is registered company. The registered company is the same company which is registered in Companies Act or any other act before Companies Act come into picture. It can be the company before the Companies Act introduced in India. Earlier, the Companies Act was 1960. Sorry, Companies Act was 1965, and after that, it got changed. Okay, so the new Companies Act is 2013. According to that, we have to perform all the activities and we have to do everything as per the Companies Act 2013. The liability which that we have discussed: limited liability, unlimited liability, limited by shares, limited by guarantees. So all these are we have discussed. There are other companies which is specified in Companies Act, that is non-profit organization. Non-profit organizations are those organizations which are working for the welfare of the society and for well-being of the people, such as the company is working as a and running a business of child preventing child labor or child abuse. That is a non-profit organization. Second is government company. Government companies are those companies which are in which the state government or the central government or any other government has more than 51% shareholding. It is a government company. In this, the state government or the central government both have the holding in the company. Foreign companies are those companies which are uh, specifically defined in the Companies Act as a foreign company, and their shareholders or the directors might be from the foreign country only. And it must specify that at least one director should be Indian from the Indian origin or the citizen of India. Next is associate company, we have discussed. Holding company, we have discussed. Investment companies. Investment companies are those companies in which those companies which invest in other companies. They have their own business of investment only. Next is producer company. Producer companies are the companies which is made or incorporated by like-minded people for the benefit of their own and for the benefit of their members. It can be a milk producing company or a farming company, or it can be incorporated by any other individuals, such as the fisheries market. Like there are people, 10 or 12 people came into picture and they want to start a producer company, and they are running the business of fisheries. So they will make a producer company after registering under Companies Act 2013. And there comes a Nidhi company. Nidhi companies are those companies which are working on the basis of taking the money from the public and providing the membership and the amount for the as a loan to their members. I know it's a bit difficult to understand all these terms and to understand the task which is given in the Companies Act. But I am just trying to make you understand in a very simple language so that you won't feel that I haven't provided you with the proper guidance on the types of companies and how they can be registered. Next is other types of companies. It can be on the basis of many other things like size, public company, private company. In public company, there is a small company and one person company, which we have discussed. Small companies are those companies whose turnover is not more than 2 crores. Before it was before the amendment which was given last year by the Companies Act, by the government for the Companies Act 2013. Now they have increased the horizon to 20 crores. Okay, then the liability we have discussed, control we have discussed, stock listed and unlisted. Listed companies are those companies which are listed on stock exchange. It can be a BSC or NSC. So those companies which are listed on designated stock exchange are the listed companies, and unlisted companies are those companies which are not listed on any designated stock exchange. Then other type is government company, foreign company, Section 8 company, Nidhi company, and dormant company. So the dormant companies are the companies which are not working in a working condition or not doing any kind of business from past 2 years, and which is dormant from the past 2 years. The simple definition of dormant company is this. Next is the benefit of incorporating a company. There are lots of privileges given by government of India to the companies, which can be a private limited company, sole proprietorship. It can be a one-person company or public limited company. So the companies have these exhaustive list. It is not the whole list given here, but it is the major points as a benefit for the companies. They have the separate legal entities. Separate legal entities means that when two or more people are coming together and incorporate a company, then they have the separate legal entities from the company. The company has will be stand as a separate legal entity, as a artificial person, artificial judicial person, I must say. And the directors or the person who have incorporated the company have their own existence or the legal entities in the eyes of law. So the company have separate legal entity, which is a very important task and a very important feature given in the Companies Act. So if any mishappening done by the directors or the company, if for example there are two or more people including me, and we have some kind of act which is not given in the our memorandum or in the law given by Companies Act, and we are taking that kind of decision, or we are taking that kind of act which is ultra wires, which is beyond our limitations, then the corporate wheel, there is a saying that corporate wheel, law will remove that corporate wheel, and then they see that does the company took the decision or the directors took that decision. Then this will provide that company and the directors have the separate legal entities. Then the company is not responsible for the ultra wire act of the directors. Those are the directors are wholly responsible for their acts, which is ultra wires. Second is uninterrupted existence. That is a very great feature. Like take an example. Me and one of my friend has started a company, a private limited company, and we have taken our shares in the company. After my demise, or if I get deceased or something, which anything happens to me, then the company's existence will not getting affected, because the company has the will run on the going concern basis. Even if I am present or not, the company will still run for the future purpose. There is no bar on the company that if a director or a shareholders dies or getting diseased or something happens to the shareholder or director of the company's existence will not get affected. It will not get closed. The company runs on the principle of going concern basis. Next is limited liability that we have discussed in earlier slides. The limited liability is the liability of the shareholder or directors towards the company till the amount they have the shares, up to the amount of their shareholding in the company. For example, uh, I have a company and I am a director with another person. We have 50% of shareholding in the company, and the total shareholding of the company is 1 lakh. So in this regard, then I have 50,000 of liability on me. If anything happens to the company, like company dissolves or something, then as per this law, I have only 50,000 of liability on my part, not more than that, as a shareholder or the director of the company. But the company has the full liability towards their creditors, or towards the people to whom the company owes the money. Okay, then there is free and easy transferability of shares. If you are having a private limited company, then this is a difficult task, because there is no public involved in transferability of shares, because it is a closely held company. Closely held means that the company does not involve any public transfer of shares. No other person except the relatives or the people who are known to the shareholders or to the directors can be involved. Not apart from these people can be involved in the company. And if you are having a private public limited company, then it is a very easy task. For example, we have Reliance Industries. Then in that case, we have the free and easy transferability of shares. At any point of time, we can transfer shares also, and we can trade it on the stock exchange also. Next is owing liability. Owing liability is, owing property. Owing property means that the company can take the property in his own name, because they have the separate legal entity in the as an artificial judicial person, because the company is a judicial person in the eyes of law. It can purchase the property, it can sell the property, it can hold the property in its own name. Next is the capacity to sue and be sued. If you are having a company, then it is a very easy task, because before going into any kind of contract with the company with another person, the company goes into a contract, or they just write it down on a paper, or something, then they just sign it and make a contract. With this help, the company can sue or can be sued by any other person. Otherwise, if your company is not registered, if your organization is not registered at any point of time, then you don't have this kind of benefit as an advantage given by the Companies Act. There are relationships, because the company has their own relationship with the public or with the directors, and the directors have their own relationship with the company. So there is a dual basis of relationship going in the company. Next is the borrowing capacity. If you have any other unregistered company or the unregistered organization, for an example, I am running my own business, but it is not registered in any places, like not on GST, not in income tax, not in Companies Act. Then if I go to to any bank or NBFC, then I will not get any kind of loan, because they will easily say that your business is not registered, and we don't have any kind of papers that your business is registered. In this case, that I am not being able to get any kind of loan from that bank or NBFC. I can get only the personal loan or another kind of loan on that basis. But if my company or my other business is registered in any of the law, then I have a borrowing capacity. My credibility will increase in the eyes of the law, and also for in the eyes of the borrowers, because I have this registered business. I have the track record that my business is running from 1 year, 2 year, or so on. Okay, there are any more benefits provided by the Companies Act, such as perform internationally. If our business is registered, then we can work in the international forums also. We can make the business in international levels, like export import license. We can, after getting an export import license, we can just run our business internationally. The perpetual existence is the same as uninterrupted existence. Enhanced value in the market. Enhanced value in the market means if I am running a business, then I have the good credibility or market business advantage in the market. The potential investors might be interested in my companies because I am running my business from past 1 year, 2 year, and I have a registered business. Then the market value of my business will increase day by day. It will not get decreased. So the business, after running a business, my market value will increase gradually. Ease in transfer of ownership is the same easy transferability of shares. Next is disadvantages of there are many companies, public and private, but here we are taking only the disadvantages of private limited, because it's very difficult to make a public limited company, and public limited company has their own disadvantages, but we are just talking about the private limited company here. So the major disadvantage is it restrict the transferability of shares by its articles. The articles are the bylaws of the company, which are governing the in-house of the organization. Those are the articles, and memorandums are the there are two things: memorandum and articles. Articles are the bylaws of the company, which is governing which governs the internal matters of the organization, and the memorandum is the law of the organization, which govern the whole company. So it specify what are the actions can be taken by a company, how to deal with the directors and other parties in the organization or outside the organizations, how to do the contract, and how to run the business. That is governed in the memorandum. And article specify the internal matters of the company. It governs the management of the company. So it specifies that the transferability of shares is restricted in private limited company. Second, the number of shareholders can be minimum 2, and maximum it can be 200 only. So if I am owing, I have a private limited company, then my shareholding will be maximum for the 200 people. I cannot increase that number of shareholders from 200. If it is increasing, then I have to go for converting my private limited into public limited company. Next is I cannot issue prospectus to the public, because it restricts the transferability of shares in articles. Then I cannot issue prospectus to the public. I can only buy or sell my shares of private limited company within the company with my relatives or the known people. Okay, and I cannot quote my shares on a stock exchange, because it is wholly restricted by the company, because because it cannot transfer the shares to public, and it is closely held company. That is the reason we cannot quote our stocks of private limited company on a stock exchange. So these are the basic disadvantages of having a private limited company, which I must say that we have not too many disadvantages, but all these disadvantages are related to each other. In a big picture, it is only a one or two disadvantage on my side. If I think if I am incorporating an organization as a private limited company. So we are going towards the next thing, that is the distinction between companies and the partnership firm. We all know that we can incorporate the company and we can incorporate a partnership firm, but the partnership firm has their own benefits and their own liabilities, and the company has, we have seen the benefits and the disadvantages. So the companies and partnership firm has various differences. In this slide, we are discussing all those matters which is describing the distinction between the companies and partnership. The companies are incorporated on the basis of under the Companies Act and on the basis of the Companies Act which they have specified. And whereas the partnership is formed on the basis of mutual agreement between two or more people. Companies Act is governed by Companies Act to the companies are governed by Companies Act 2013, and partnership is governed by Partnership Act 1932. This is the major only a definitive defined distinction between the companies and partnership firm. Companies registration is obligatory, and whereas the partnership firm registration is voluntary. If you want to register your partnership firm, then you have to register under the Partnership Act 1932. We can just write down the whole contract between the partners and get it registered under the State Partnership Act, which is specified by all the state differently. Okay, and the Companies Act is normally we can just go on the MCA site and register a company. The number of partners is minimum 2 in the partnership firm, and maximum 100 can be admitted as a partner. And whereas in the case of private limited company, it is minimum 2 for the members and maximum 200. And for the public limited companies, minimum 7 members can be admitted as a member of the company, public limited, and the maximum, there is no bar on maximum number of members in the public limited company. The company has separate legal entity, which is the major thing, and the partnership firm doesn't have the separate legal entity. The partners and partnership firms comes into the same picture. Company has contractual capacity for suing and be sued in the name of company, whereas partnership firm cannot sue any other person because it is not a registered organization in the eyes of law. If you get it registered, then you can sue the other interested parties or the stakeholders. Otherwise, you cannot sue it. There are various other distinctions, like companies have the flat 25% tax rate in Income Tax Act, whereas partnership firm has 30% slab rate, flat tax rate. And if I am having a share, I am a shareholder of the company, and I am getting a dividend from the company will pay the dividend distribution tax on that part of dividend. Whereas if I am a member of or a partner in the partnership firm, then my share and my other income will be clubbed together and they will be charged according to Income Tax Act. So these are the basic disadvantages of having a partnership firm, because we don't get a separate legal identity in the eyes of law. So it's quite a annoying thing if we are having a partnership firm only, but we have a good benefit of having a company also. Next is one person company. That is a very good example of having a company. This is introduced in Companies Act 2013 only. Earlier it was not introduced by Companies Act, but it is now a valid picture. It is defined as the company running and owned by a single person. As the name suggests, one person company. It gets the privilege of private limited company. Only a single member runs the company. Only a minimum one director is required. There is no bar on a minimum capital requirement. You can start with 10,000 rupees. You can start with 1 lakh rupees or so on. It has also a perpetual succession. Sorry, it doesn't have the perpetual succession because uh, if the director or the main person dies, the company will not run. That's why the company has to introduce, the director has to introduce a nominee to the company. In case he or he dies or anything happens to him. So there are many advantages and disadvantages of having a one person company. Sorry. So the OPC or a one person company provided with the number of exemption and have the lesser compliances related to the private limited company. For an example, a company has to go for the AGMs, annual general meeting, every year. OPC, as the name suggests, only a one member is there and only one director is there. So there is no requirement of going in for AGM because only one person is required. Second privilege is that there are only minimum two board meeting is required in the whole year, which can be at least which can be in 6 months period. At least one meeting is required, and the difference between the two meeting is not more than 90 days. So if I want, then I can just take a meeting in the first 6 months of the year and second meeting in the second 6 months of the year. So that is the thing. Next is disadvantage. Second is organized sector of proprietorship company. It is solely defined as a proprietorship company, as a sole proprietorship concern also is there. So it is a organized sector of the company. If I am a person and I want to go into a uh, running a business and I want to incorporate an OPC, then it is my own proprietorship concern. Okay, and my own proprietorship company. Next is minimum capital requirement. The capital requirement is very limited. uh, there is no bar on what amount we can introduce as a capital in the company. Next is limited liability of the members to be limited by unpaid subscription money. It is basically for all the companies, which can be a private limited company, public limited company, or any other company. The liabilities to the extent of the subscription amount or the subscribed capital amount. We have to pay only till that amount. uh, OPC has a benefit of getting easy loans because it's come into the picture of Companies Act and as a get a tag of company. That's why there is a complete single person's control on the OPC because there is no other person and no other director in the company. So the company has only a single control and it's very easy to manage. There are various disadvantages. That is, first, limited membership. The membership is very limited. It is only to the one person only, suitable for a small business because you can't run a very big business with OPC. Only a small business can be run. Line between the ownership and control of the organization is very limited, or a very thin line, because uh, which we have discussed in the earlier slide, that corporate wheel is there between the company and the director. So there is a very thin line. There is very thin line between these two, and person can use the business for unethical means or unethical practices. There are not eligible to incorporate more than one person company become nominee in more than one such company. It says that if I am a director of a one person company and I nominate some other person, that who as a person who will take the charge if I get if I dies or if my demise is there, then that person will get the charge of the company. But that person cannot be a nominee in more than one company. It can only be a nominee in only a single person, single company. Next is NRI is not allowed to incorporate an OPC. If I am a shareholder, if I am a director of a company, and I have three or more people in a company, and some might be an outsider or NRIs or a foreign national. But in this case, no one can be the NRI or a foreign national cannot incorporate a OPC. As a OPC, I cannot carry out the NBFC investment activities. I cannot do the NBFC task of taking a loan and making a loan or depositing an amount from my members or some other people. I cannot run that kind of business as a OPC. Next is OPC cannot be converted into a Section 8 company. Section 8 company is NGO. The NGOs or non-government or non-profit organizations are the organizations which run their business for the welfare of the society and well-being of the people. So I cannot convert my OPC into that Section 8 company, and I don't have the perpetual existence or succession in the business. Does anyone have any question till date, till this time? If you have, then you can let me know, because if you have any question, then I can provide you, I can clear out your queries till this.
No one so far, sir.
Okay, okay. Because it's a very complex topic, and it requires more attention. And if you have any queries, then just do let me know, because and we can just clear out those queries in the meantime.
Sure, sir.
Okay. The next is partnership firm. We have discussed a good difference between the partnership firm and the companies, and we can just provide, just understand the characteristics with that difference. We have the membership. It can be up to from two members till 100 members. We have the mutual agency, because two or more people come together in the mutual agreement that we are running a business for the profit sharing motive. Next is unlimited liability, because we are running a business which is between the two or more people. Then the liability of the partnership firm is unlimited. It can our personal assets can be used for paying those liabilities. It is not the same as the companies, in which we have the liabilities up to the extent of our shareholding. And with this, our personal assets can also be used. The continuity is affected if two or more partners dies. uh, if any partners goes out from the just leave the partnership firm, or some other partners enters the in the partnership firm, then we have to make changes in the partnership deed. If only two members are there in a partnership firm, and one partner got diseased, or anything happens to that person, then the partnership firm get dissolved. The registration of partnership firm is on the voluntary basis. If you want to register the partnership firm, then it's up to you. You can go and just get it registered in the State Partnership Act, and under the Partnership Act 1932. And if you don't want to register it, then you can just write the whole contract between the partners at the mutual agreement, and get it notarized by notary public, and just sign it with the witness only. Next is contractual relationship. All the partners are liable for each other's action. If uh, I am a partner in a partnership firm, and we are the two partners in that firm, then his actions, for his actions I am liable, and for my actions he is liable. So the contractual relationship occur in that sense. There are many advantages of partnership firm. It's very easy to form, because it doesn't require any other registrations, or no other cost except the stamp paper cost and the notary public notarized cost. It's better for financial resources for the sole proprietorship or for a small business. Like if I want to run a business in a very small manner, I don't want to go in a deeper, or I don't want to spend too much on my business because I'm not sure that I should go at that extent. Then it's a very good initiative to go in the partnership firm. Greater managerial resources. The managerial resources are very much smooth because the management is very small. There are only two or more people, two or very less number of people. It doesn't require so much managerial exertion between the partners. There will be a balanced judgment because we are just for anything we are just talking with another partner that is it required or not, and the business is running properly or not. After registering a business under one category, later can it be transferred to another category if all the person involved in the business or firms wishes so far. Uh, I want to ask in this that registering a business under one category, what does it mean? Is it a company or a partnership firm or a one person company? If it is a one person company, then you can't transfer it in another company. And if it is a partnership firm, on a later stage, you can convert your partnership firm, close that partnership firm, then you can convert, like incorporate a company in the new name or with the same name, but you have to just check the name first. And if you have a private limited company which is a small business, then you can convert it in another business area such as joint ventures or any other company. You can do it on a later stage. But if it is a partnership firm, it is a OPC, then you can't change it. Change a partnership to a partnership firm or vice versa. No, the partnership firm can be converted into company, but a company cannot be converted into partnership firm. A director can enter into a partnership firm or a partnership agreement, but a company cannot do so. In OPC, if I am a OPC, then I can go into a partnership firm as a partner, but my company will not go into that because the company is a separate legal entity. Okay. I think I have just clarified your query in that. Yeah. Next is economies in management. The management is very small, and there are no such complex tasks to do in that regards, because the partnership firm does not require so much complex tasks. So management is very easy. Protection of interest, we have to protect our interest, the interest of our partnership and the partnership firm. More big risk as compared to the companies. There is no such big risk. Disadvantages are liabilities unlimited in this, restrictions on transfer of our interest. If I am dying or I am just want to leave that organization or a partnership firm, then the whole organization or the partnership firm get dissolved. And if my partner wants to go outside or he just want to introduce some other person, then there is a restriction. We have to just calculate the partnership firm's criterias, such as how much capital he can bring in, what are our shares, the profit we have, and we have to change every bit of the contract. There are many mutual conflict. If me and my friend is running a partnership firm, there might be a mutual differences between us on the basis of some other things, like if I want to do I want to go in a business of trading, and he doesn't want to go in the trading, he just wanted to go in the manufacturing business, then there will be conflict. Might be financial or any other kind of conflict between the people of the partnership firm. There inadequacy of capital or restriction on the number of members, because there is always inadequacy of capital. The capital is only that much amount which we have introduced in the company, and the this capital amount will increase, but there will be always inadequacy. There is restrictions on uh, interest on capital. There is restrictions on uh, withdrawing the capital from our account, and we have to we charge that amount to our personal capital account. And there is restrictions on number of members also. There is only maximum up to 100 members can be admitted. There are mutual conflict is done. Sorry, this is again I have written the same thing. There is lack of public confidence because the partnership firm might be registered or may not be registered. Then the public can is not interested in that kind of organization. The public doesn't believe in this kind of organization because they cannot certify that the company the firm is running successfully or not. So this is the very big disadvantage. No independent legal status and limited scope of expansion. The same thing because the partnership firm is running on a very small extent. The legal status is very not independent and the scope is very limited. We cannot expand our partnership firm as in that much extent as compared to the companies. For the company we can expand it to the international level also, but we cannot run a business as a partnership firm on the international levels. For that we have to just go for the company only. Next is LLP. LLP is all you know, limited liability partnership. The limited liability partnership is different from the partnership firm because limited liability partnership should be registered by the under the law. And the compliances are also the same as the companies. Okay, so the limited liability partnership name suggests that the liability of every partners is limited to the extent of the partnership in the firm. It has the same privileges as compared to companies, and it is a very good I must say it is a very good initiative if people start their startup with the LLP or the company, because LLP has a number of advantages as compared to companies, which is always there. And it has a limited scope of like expansion as compared to the companies, but it is a very good initiative of companies if startups are getting registered in the LLP also. So if any person comes to me and they want to start a business as a startup, I always suggest to go into a company or an LLP as an initiative, because initially people don't have that much of capital in their hand to start a business. They cannot go into complex compliances. They don't know business will the startup will go in and get endeavor success or not. So the startups can be registered in the LLP, or it can be registered in the companies also. So we have the these advantages also. Kindly mention the approx expenditure on incorporation and compliances. We will go on this in the nearby slides. Just wait for some time. I will provide you the approx or an idea of expenditure for the incorporation and the compliances. So don't worry, we'll discuss it on the later stage. So the advantages are there is no limited or there is no requirement of minimum contribution. You can start a LLP from in fact from 10,000 also, and till any amount if you want. There is no limit of on owners of the business, as the name suggests that limited liability partnership. The Thus, as compared to the partnership, we have the limits on the owners of the business or the partners of the business. In LLP, there is no limits. You can add as much as you want as a LLP and the partnership of LLP. the registration cost is a little bit low as compared to the company. But nowadays, as you all know that government has started ease of doing business, and the cost is similar for the company incorporating a company and LLPs or at approx same. So there is no much a difference in the cost now, but it has a little bit registration cost minimization as compared to company. Only a some amount is required. Okay. Next is no compulsory requirement of audit except the contribution exceed 25 lakh or the annual turnover exceed 40 lakh. There is no such compulsory audit in the case of uh, LLP. We have the separate legal identity, the same as in the company. Okay, the LLP gets the easy access to of loans from the NBFC, from the banks easily. If one person leaves the LLP, then another person can run that LLP. There is no nothing happens if I am a partner in the LLP and I might get died, or I get disease and I want to leave that LLP, then the LLP's existence doesn't get affected by it. Okay. And the LLP has a less number of compliances as compared to the companies. Okay. And the LLP has a different taxation aspect as compared to the companies, because the companies are fully taxable at 25% tax rate. The LLPs are taxed at same par as the LLPs. Sorry, partnership firm. They are taxed at 30% flat tax rate on the LLPs also. But you will get a difference in the LLP that the liability for payment of income tax and share of partnership partners is not an LLP is not liable to tax. Like if I am having a share in the LLP, that I am not liable for paying my tax on my shares of on LLP. Okay, my share, tax on that share of LLP is paid by the LLP only. I don't have to pay the separate tax for that my share, for that share of mine. Okay, there is no dividend distribution tax in LLPs. The LLP get the advantages of interest on a partner's capital for withdrawing and capital contribution, payment of salaries, bonus, commission, remuneration. These all are the things allowed as a deduction in the Income Tax Act also, and specified in the Companies Act also. Next is dividend distribution tax is not applicable, which we have discussed, that LLP is not uh, covered by dividend distribution tax. If I'm getting any kind of dividend or any kind of amount from my LLP, that the LLP is not liable to pay any dividend distribution tax, because there is no taxation applicable on that thing by the Income Tax Act. Where in the case of companies, if shareholders get any kind of dividend, then the dividend distribution tax is applicable on the companies. Next is LLPs also have, there are various kind of disadvantages. That is the public disclosure of financials. Every LLP has to provide their financials into public domain. They have to show that the LLP is working efficiently or not. In fact, they have to file the annual compliances with the MCA. MCA is the Ministry of Corporate Affairs and the ROC, Registrar of Companies. They have to provide their financials, and they have to file their compliances every year, and which will go in the public domain, and they have to provide that they are running efficiently or not. So their all the financial detail will go public in this regard, as in the case of the companies. If you don't file if you don't comply with the LLP Act, and you don't file your annual filings of the LLP, then you have to pay the penalty of 100 rupees per day per form, and there is no cap on the upper limit of penalty. It can be go into lakhs also, and there are various other penalties described by the LLP Act if anything's happened to the company. Whereas in the Partnership Act, there is no penalty. The penalty comes under the Income Tax Act only. Sorry. Uh, in LLP, there is no concept of equity or shareholding. So the angel investors or other venture capital investors cannot invest in that kind of LLP. In that case, the LLP has to rely on the promoters, debt funding, NBFC banks only. They cannot take the amount from angel investors or the venture capitalist or any other person, except they can take the amount from promoters. The promoters are the people just who are the people who just promote who are the first directors of the company while incorporating a company. And debt funding is like only a uh, loan taken from from the banks or NBFC. The income tax rate is higher, as we have discussed that there is flat 30% tax rate on LLPs as per Income Tax Act. Now we are going into the big picture, that is process of incorporation of the company. The process of incorporation of company is a very easy task, and government has taken a very good initiative. They have provided us with a very good website, MCA 21, and it's running very good nowadays. And it's all the online process. You don't have to go to the ROC, registrar of companies, for any formalities. The ROC or the MCA will provide you everything on the internet. Every form is online, and the process is wholly online. You don't have to go anything. Don't have to do anything in that. So for that, the process is if you have at least two persons are required for incorporation of private limited company. At least two persons are required. They will be the first directors of the company. And in the case of public limited company, there are at least 7 people are required. Okay. And in case of private limited company, there is no minimum capital requirement. You can start your business with 10,000 of capital, and maximum you can start with any number of capital, any amount. And in case of public limited company, the capital is 5 lakh at least. So there is difference in public and private limited. So for the process of incorporation, you have to first file the application in the name of run form, that is changed to Spice Part A. So you have to file your name. You have given the choices of giving 2 names as a preference of the company that they want to get registered in those names. After filing that run form, you have to pay the fees of 1,000 rupees for reservation of name. That is the run form or the Spice Part A form. In this you have given the you have to provide with the 2 choices of name for the company, and then after that the ROC or the MCA will provide you that your name is registered, or your name is reserved by us for 20 days. You can just start your process of incorporation. After that email, you can start your registration process. Before that, we cannot start our registration process, and we get 20-day time frame for registering our company. Okay, and providing our all the things. Second step is applying for DSC and DIN. For DSC is digital signature certificate. For digital signature certificate, you have to go to the professionals like CA and CSR go towards the digital signature certificates. They are the signature, online signature, which is used for incorporating a company. They are these are the signatures to be assigned or to be attached with the forms also. Uh, it also require a cost for getting a digital signature certificate. For getting a DSC, you need your KYC, that is know your customers services. In that you will need your PAN card and Aadhaar card or a DL. So at least PAN card and Aadhaar card is required. With that, mobile number and an email ID. The mobile number and email ID cannot be used by another person for registering a DSC. It should be unique, and your ID cannot be used by any other person. Next is preparation of the documents. In this, we the what will say the professional is prepare the documents in which we have to provide that the DIN DIN 2, in which we just make the things like uh, that the directors are not disqualified if they have the membership, or they are the shareholders or directors in any other company. They have to just provide their company's name and their shareholding and any other process. If they are disqualified by the Companies Act or under the Companies Act, they have to just provide that in their declaration. And with that, we just take your things like PAN, Aadhaar, bank account details, bank statement, or any other documents required by the law, or DL. These are the things which is required. Phil, then after that, we'll file your e-forms. In e-form, there are SPICE Part B forms, which includes your AOA, MOA. AOA is Articles of Association. These are the for the management of the company. Memorandum of Articles, that is the bylaw or the whole law governing the organization. Okay. Then it is the Agile Pro INC 35. There is there, which is used for applying for GST numbers, for EPFO account or ESI account. It also includes the proof of identity, bank statement, address, and the signatures of the opening of the account, or any other passport size photos of the directors with the sign. Okay. All this process, these documentation and filing of the forms should be done in the period of 20 days only. If any if anything occurs between the 20 days, or a professional is not able to file the forms, or he will not get the for any case, like if I don't get the whole document list and the exhaustive list of the documents within the prescribed time by my clients, then I cannot go with the incorporation of the companies after 20 days. Then again we have to I have to just file for run form, reservation of name. Okay. So in that period, we have to file those incorporation form. After that, I just get after the ROC and MCA goes with the form that all the things are correct, all the particulars are duly filed, companies, the forms are totally okay, then we will get the incorporation certificate, that is certificate of incorporation. It is the certificate of incorporation can be vary from 5 to 10 days, or maybe more than 10 days. So after that, you will get your PAN number for the company, your TAN number for the company, and the certificate of incorporation for the company. So this is the basic process of incorporation of the company. So if I suggest you that what will be the approx amount of incorporating a company, then the The first is filing for the run form. It is approx 1000 rupees, almost 1000 rupees. And after that, you, if you are starting your business for around 1 lakh rupees as a capital introduction in the business, and every state has their stamp duty, different kind of stamp duty for on that capital account. Like in case of Rajasthan, the stamp duty on 1 lakh of capital is 1010 rupees, and it vary from the capital amount. Like if you go towards 5 lakh, then it varies. Then if you go to 10 lakh, it varies, like 5500 for 10 lakh capital. And if I go beyond 10 lakh up to 50 lakh capital, then it can vary from 10,500 or something. In case of Bangalore, it varies for around 100 to 1000, or up to 5 lakh, it's around 1010, 10 or 1500, and more than 5 lakh, it's 3050, I guess. Okay, so the this amount is different. Apart from that, there is a fees for PAN or TAN application. It is around approx 200 rupees. So these are the incorporation expenses, approx incorporation expenses, because I cannot provide you the stamp duty charges. The stamp duty charges are paid at the time of incorporation of the company, while filing that the capital amount in the capital introduction amount column. And for the DSC, digital signature certificate, the amount of DSC also varies from places to places. Like some places may charge for a single DSC 1000, or some might charge some other amount. I'm just providing you approx amount. It's not a fixed amount. And after that, the professional might charge from any amount, 5,000, 5,000, 10,000, or so on, for incorporating a company. Okay, so this is the process of incorporation for incorporating a company. Next is the process of incorporation of LLP. The incorporation of LLP is slightly different, but almost same as compared to company only. In this, first we have to find the run form, and we have it's almost the same. We have to pay 1000 rupees, but in this case we get the 6 choices of name. If you have 6 choices of name for the LLP, then you can file it with a run form. Then we have to file the consent form in form 2. With that, we have to just provide the subscriber sheet detail of every partner. In LLP, there is no partner, it's designated partner. So we have to provide the details of designated partners with their KYC, in which it includes their bank statement, their IDs, their signature, their photos. With that, the professional has to witness these designated partners. I have to also sign, as a professional, I have to also sign their the details of the designated partners, that it is truly and truly provided, and it's not fake IDs of the designated partners. Then we have to make an agreement in form 3. Form 3 is the agreement which we have to file within 30 days of incorporation of the LLP. It specifies the whole agreement between the designated partners, that on what basis the LLP is formed. It is specified that the business of the LLP, the members details of the LLP, the business transactions, the business details, and ratio of distribution of profit or loss, and other things. And if there is any change in LLP, like any other new member is entered, or any other changes, like in between that 30 days, any person dies or anything happens, then we have to file with that LLP3 form number 4 also, because it is a change. If any change happens in the LLP, after that we'll get the SEOI. It is the same process, but in this case we get around 60 days for for a reservation of name, we can do this task within 60 days for LLP. As compared to the company, we can do it in 20 days, but in this case, we can do it the whole task in 60 days of incorporation of LLP. Now comes the picture of annual filing of companies. Annual filing of companies are quite complex and quite a tedious task, because there are various forms involved, and as per the applicability of the company, and as per the applicability of the ROCs. So there are various forms on the basis of which the annual filing cost may vary. It includes ADT1 first and foremost form for the companies after incorporation. It has to be appointment of the auditor. The company has to appoint the auditor, and within 15 days, and they have to file the ADT1 form. If a company doesn't want to appoint an auditor within 15 days and does not want to file the ADT1, then they can file it before or on or before the AGM, annual general meeting, which is due after incorporation of the company within the year, after a year. So at that time also we can just file a ADT1, but it's not advisable to all the companies to file at that point of time. It's advisable to file the appointment of auditor form ADT1 at the time of incorporation only. After that, INC 20A and INC 22A. INC 20A is commencement of business form, after which is to be filed within the 180 days of incorporation. It is specified that we have commenced the business. In this, we have to provide the details of the bank in which in which our account is opened, and with that we have to attach the bank statement that we have introduced, or we have deposited the amount of our capital into the bank. And if there any transaction happens, then also it should be attached with this form also. INC 22 is validating registered address of the company. If anything happens while incorporating a company in INC 22A, while incorporating that we cannot provide the proper address of the company, then we can do it in INC 22A within 30 days of incorporation. Then there comes a form of DIR 3 KYC. It is KYC of all the directors, which is to be done every year now, on or before 30th of September. Now also we are going in the doing the KYC of every directors of every company till the 30th September, because that date is till 30th September. Next is MSME Form 1. If any company owes or does a transaction with any other small scale company or any other company, and that amount is more than hold for more than 45 days, then they have to file this form, MSME Form 1, with ROC or MCA. These are they have to file twice in a year for half yearly. First time is on or before 30th October, and second on or before 30th April. Okay, next is deposit form, DPT3. It is an annual form which is to be filed by every company. If you have the zero deposit, then also, if you don't have any deposit, then also it is recommended to file this form. These include all the amount which is considered as a deposit. It includes the loans and other kind of liabilities which the company took from bank or any other institution, or from a person who can be a normal person also. They have took the amount, then they have to provide the whole particulars of that deposit. Next is AOC3 and MJT7. AOC3, AOC4 and MJT7 are the annual filing of the companies. These are the annual accounts and annual returns for the company. AOC4 should be filed within 30 days of AGM, that is 29th of October, as the AGM date is 30th of September for most of the companies. And MJT7 should be filed within 60 days of AGM, that is to 29th of November. These are not the final dates. It can vary as per the incorporation of the company and as per the directions given by MCA, ROC and the government. So it can vary from time to time. Okay, so these are different. Next is annual filing of LLP. In DIR KYC 3, we have to done in LLP also for designated partners up to 30th September. This is same for LLP also. There are different forms. There are only two forms for LLP, Form 8 and Form 11. Form 8 is a statement of accounts and insolvency, which should be filed within 30 days from the end of the 6 months of the financial year. Like in India, that our financial year is from 1st of April to 30th of September. Then we can file it up to 30th of October. This Form 8 and Form 11 is annual return, which is should be filed within 60 days of each of the end of the financial year. That is 31st May of each year. We have to file this. Okay. And this annual filing of the companies, there are also include various other things for the companies, such as making notices, drafting the minutes of the company, drafting other agendas of the company, guiding directors and other people. In that case, there are various other things happening. So for that, in that case, the annual ROC filing fees may vary, and it doesn't include the fees for audits, because audits should be done by the CAs only. It doesn't include the cost of tax filing, because tax filing is done by the CAs, and it only involves the cost of annual compliances of ROC. Okay, so it may vary from person to person, or professional to professional, or the firm to firm. So there is no minimum or maximum limit in ROC compliances. So can you tell about annual filing of partnership firm? Sir, there is no annual filing of partnership firm. You have to file only the income tax return, and in this case, I don't advise for any person to go into a partnership firm, because there are I have seen cases where the conflict arises within a year or within a month between the partners, and it is not a sustainable business to run a partnership firm. So it is always advisable to go in LLP or in a company. So as a professional, I always advise this thing, that you should go for the company, incorporation of the company, or incorporate a LLP as a startup, because you enjoy a various number of benefits which is given by the government and ROC. Otherwise, you don't have any kind of benefits. My product is not in market yet for sale, but I want to register my company. So what are the essential document at primary level? Okay, so your product is not in market yet for sale. There is nothing to worry about. But if you want to register a company, you need your at least 2 person as a first directors of the company. It can be your family member, or it can be your known, or it can be any other person with whom you are comfortable to incorporate a company. In that case, the first thing is, if you have a DSC, it's good. If you don't have DIN or DSC, DIN is director identification number. If you are earlier, if you have a company earlier, then you must have you have a director identification number. That is the unique number for identifying every director of the company. So if you don't have that thing, then we will prepare your DSC. In that case, we will take your declaration on DIR 12 or DIR 2, that you are not a director, or if you are a director of any previous in any other company, then we'll take your uh, take the whole things that you are director or something. After that, we will just discuss all the aspects, and we'll take your bank statement, your KYC details, and then incorporate the company. Can we convert our LLP to private limited company? Yes, we can convert it on a later stage. There is no issue in that. We can convert our LLP into private limited company. It is given in the law also. After registering company, from that day only do we need to do annual filing. No, the annual filing is done as per the dates given by the ROC or the Companies Act. So as per that dates only we have to go into the compliances, and compliances are totally on the part of the company secretary or the CAs of the company. So it's not so much difficult task, but it's very easy task for the companies also, and it's not a bearable task also. It is an economical affair for the company, so you can bear that cost. It's not too much high. It is within the limits of the company. Okay. As yeah, welcome. And the conclusion is, from my side, it's better to register the organization to enjoy all the privileges for the company, and because of the ease of doing the business, all the forms are online and formalities are done online. There is no one is there to run towards the ROC, or there is no middleman is there in that process. Liabilities of business can be shared with in the companies and LLP. Otherwise, you have to bear the whole liability. That is, the liability will be unlimited. You have the fair trade practices. The true and fair picture of your business can also be understood by you. You can take the clear picture of your uh, uh, business financials. You have the transparency of the business, because in many of the provisions, it is advisable to provide your the business financials on your websites also. You have to maintain the proper books of accounts. That is a major advantage of registering a business. If you don't do this, then there is no proper accounts or business. Trademark registration is different from company registration. Yes, exactly. The trademark registration is totally different. Trademark is something which is a unique thing for any company, that company or individual. It is if you are having a product which you want to get a trademark, then you have to go for trademark application, which is a trademark act, and the company registration is Companies Act. After trademark, you will get the trademark registered in your name or the name of the company. Okay, and company is different from that trademark. Any other question?
Yeah. Any other questions from the participants? Okay. Sir, we have received one more question from the participant.
Yes.
Saying that in your suggestion, a private limited is good, or LLP is good for the new startup?
See, the difference is the cost in incorporation cost is not so much. There is no difference in incorporation cost nowadays, because somehow the incorporation cost is almost same for LLP and for companies. Second is on the basis of taking it as compliances. The compliances are lower in LLP and very less in LLP. But in case of companies, the compliances are very much. But if you take like loans from the company, you have much better prospects of getting loans, and you can issue shares also. You can do any other business with the LLPs, sorry, with the companies. But in case of LLP, you have a limited scope of getting loans, and you cannot rely on any other things like angel investors or other people. In case of companies, you can get the benefits of taking advances or loans from angel investors or joint ventures in that.
Okay.
So
Yes,
so
sir.
there is no much cost, but the difference is on the basis of the compliances only, which I must say. So it's totally depend on the people who want to incorporate, who want to go with the LLP or who want to go with the company. So it's totally depend on them only.
Okay. And there is one more question, sir. He has asked, like, startups, those who are not making business, do they need to pay yearly tax?
Yes, they have to file their income tax returns every year, and without that, and in that case, they have to like they are come under the 30% tax slab rate, and with that they have to also pay their personal income tax every year. Their share of business will also come under their own name, and it will be clubbed in their own personal income tax. So it is a difficult task for them. And if their company is not registered, you cannot provide it like you cannot go in any other scope, and you cannot have that much of extent of running your business. So your income is come under your name, and you will taxed with the personal income tax only.
Yes, sir. Sir, we are receiving one more question from the in the chat box. If any investor wants to invest in a LLP, what's the process? As the shares, as the shares can't be given. If any investor wants to invest in an LLP, what's the process? Share count.
See, if I am an investor, I can't invest in LLP. It's almost impossible for me, because for coming into an LLP, I have to be a member of LLP or a partner of LLP. Without that, I cannot invest the amount. So angel investor or some other person cannot invest in LLP. It can be we can just go for the joint ventures only for this LLP. Okay, so we can the investor cannot invest directly into LLP. So he must be a member or a partner in the LLP also. Second is, once we register a company in private limited, there is a need to Shop Act license and MSME license. There is no need to get a Shop Act license, but if it is required, then you can take the MSME license for your company. MSME is medium, small size, medium enterprises. So you can take the license also. In that case, it's also Udyog Aadhar license. So you can go for that also. You will get some other privileges of MSME, not more than that. If you want to go into the Shop Act license, it depends on the state wise, because in Rajasthan, it is not required the Shop Act license if you are registered in the Companies Act. If Shop Act is typically for the shops only. If you are running a shop in any area, then Shop Act license is required.
Okay. Any more questions, participants? You can unmute yourself if there is any question. Okay. I think there is no more search. Yeah. Yes, sir.
Welcome. It's a wonderful session, and I got to know you a lot. Welcome.
Yes, one second. Swapnali.
Yes, sir.
Yes, I think. Is there any question from your end?
No, sir. No, I just wanted to thank sir. Yeah. Thank you so much, sir.
Yeah, welcome. It's a wonderful session, and I hope you enjoyed it and you got to know a proper difference between those entities, and hope we will meet soon in the future for any of the tasks. So if you have any queries regarding any of these, you can contact me on my WhatsApp number, my mail ID anytime. So I'm always available.
Sure, sir.
Welcome to everyone.
Yes, sir.
Thank you so much for this wonderful session, for hearing me out. Thank you so much, everyone.
Yes, sir. I would like to thank you also, sir. Like it was actually an eye-opening lecture. We want to say, because since we are also into we will be working with the startups. It is very much important for us, and even some of our teammates who have also joined to hear your lecture. It was very good, sir, actually. And so we from our NaaViC team, we sincerely thank you for sparing your valuable time for this amazing lecture, sir. Thank you.
Thank you. Thank you so much. Thank you.
Yes, sir.
It's a very nice knowing you all. Thank you so much.
Thank you, sir. Thank you. Yes.
Yeah.
Okay. Okay, dear participants. So I think the schedule is already been shared for tomorrow. So then we'll all meet tomorrow. Okay. Fine. Thank you. We'll resume the session.
Thank you, sir.
Yeah.
Thank you all.
Thank you, sir.
Yes.